In this video, we're going to cover how to purchase your first home in Australia in a step-by-step guide that I wish I had when I was purchasing my first house. My name's David, I'm a mortgage broker and I've helped hundreds of people buy their first homes, and this video is everything I have learned about the process from start to finish. One of the biggest things we're going to cover in this video is using the government to your advantage in purchasing your first home, and if you do everything right, there's tens of thousands of dollars worth of value up for grabs. The first thing we want to do is understand your goals. Why do you want to purchase a property? Do you want to purchase to get out of the rental cycle? Do you want to purchase to be able to build your wealth in the long term? Are you wanting to keep this home long term and turn it into an investment in the future? Or are you going to try and buy your forever home first up? Spoiler alert, it generally doesn't happen that way, but if you want to buy your first home and make it your dream home, there are ways you can possibly do it if you have the income and deposit to support it. Now, I don't fully agree with the notion of turning your first property into an investment. What I am more interested in is generally getting a higher capital growth out of your first property to be able to purchase the next one with a lower owner-occupied mortgage, because as we know here in Australia, the purpose of your debt is going to help you into the future. The goals that you set for yourself are going to influence the type of property you want to purchase, and it's also going to impact the sacrifices you may need to make to be able to get into your first property sooner. One thing I like to do is write a brief 5-year plan specifically surrounding the property that you're going to purchase or want to purchase, so you can try and point yourself in the right direction. Now, I know goals change, but if you set yourself in a direction, generally you will make a better, more informed decision when it comes to crunch time. The reason I became a mortgage broker is because when I bought my first property, I had no bloody clue what I was doing, and the whole process completely confused me. I spent the entire time researching things myself, Googling everything that I could, trying to understand what the hell I was doing. After that property purchase was done, I sort of decided then, well, I want a bit of a career change. And you know what? This whole home purchase thing was actually quite fun. And I can make it my life's goal to be able to help people like you on the other side of this video purchase your first home with more information and to make a more informed decision when purchasing that home. The next thing we're going to look at is getting financially prepared and determining the right time to buy. When you're determining the right time to buy, it's not about time in the market, because time in the market is absolutely irrelevant. It's only a good time to purchase if you are financially ready. Have you saved your deposit? Are you spending responsibly? Do you have a stable job? When saving for your deposit, the standard expectation in Australia is that you need a 20% plus cost deposit to be able to purchase. That might not be true depending on your circumstance. You can have less than a 20% deposit and pay lender's mortgage insurance. You could be eligible for the first home guarantee, which we will cover later. Or you can have a lender's mortgage insurance waiver depending on your profession, or even a parental guarantee. Again, something else we'll cover later in the video. Have you budgeted and prepared for all of the upfront costs associated with purchasing a property? Do you understand your obligations with stamp duty, legal fees, building and pest inspections, rates and adjustments and settlement, and even your building insurance? These are all things that you will cover in your initial meeting with a mortgage broker to help you get financially prepared to be able to purchase your first home. My advice is get a meeting in nice and early, even when you don't think you are actually ready, because you might be ready quicker than you think, and if you're not, a meeting with a professional will actually set you on the right path to be able to purchase faster. Now, my little tips for fast tracking your deposit when you're saving for your first home is using things like a high interest savings account and automatic transfers. One thing I like to do is actually transfer the savings amount that I'm going to have that month out of my bank where I use my everyday spending into a separate bank where my savings account sits. This creates an extra mental barrier for me to not transfer my savings into my spending account. This just makes me think about it a little more, and 9 times out of 10, I won't actually dip into my savings for the purchase I might not need at that time. Also, avoid any major purchases while saving for your deposit. That's things like cars and holidays. Getting your coffee out, keep doing it. It's not going to make that much of a difference. Buying lunch, maybe reduce it a little bit, but major purchases is something that you need to really look at. Once you've prepared yourself financially, you've gotten yourself into a position where you think, you know what, this is the right time to buy, you should be looking at getting a pre-approval. If you're looking for a mortgage broker, that's what I do for a living. I've helped countless first home buyers get into their first homes efficiently and quickly using all the government schemes that we're going to go over later in this video. And if you're interested, book a one-on-one first home buyer session with me. The initial process of working with a mortgage broker is going to start with having your first meeting. They're going to request all of your financial information to understand the full financial picture that you have to offer. With this, they're going to put together a bit of a proposal and help you understand the government schemes and incentives you have available to you to be able to purchase your first home. This, in my opinion, is the most crucial step in the process to set you on the right path forward. Now, you would have heard the buzzword pre-approval thrown around a lot. A pre-approval is where your application is sent to a banker before you have found the property you're wanting to purchase. The reason we do this is because we want to set a figurative maximum purchase price when you're looking for property. We're going to cover that a little bit later in the video when we look at emotion and risk. You also need to understand the types of loans that are available to you. Now, what's the difference between a variable or a fixed rate? A variable rate is an interest rate that can fluctuate up or down over time based on a benchmark rate or index, unlike a fixed rate, which remains constant. A fixed rate generally you can have between 1 to 5 years, and you will notice that these rates are usually a lot lot different to the variable rates at the time because banks will want to lock in their profits for that particular amount of time. Now, another common structure we are seeing is a split loan where you may have 50% of your loan variable and 50% of your loan fixed. A lot of banks, if not all, will offer this structure if you want it. Generally, on a fixed rate product, you're not going to have access to a redraw or offset facility. These are only generally available on a variable rate product. With a fixed rate, the banks are essentially locking in their profits for that set amount of time. And when you use redraw or offset, you are reducing the amount of interest you are paying towards your bank depending on how much you have in those facilities. That is not what a fixed rate is designed for. It's designed for lower, more stable repayments, not for saving money. Variable rates, however, may come with a slightly higher interest rate, but you have the ability to save money in the long term and reduce your loan term down as well. Next, we are going to look at pathways into your first home. The first one we are going to look at is the first home guarantee. We have 35,000 places this financial year, and it's tipped to go to the same to the next financial year. This is where you can get in with a 5% deposit, paying no lender's mortgage insurance, where the government will guarantee a portion of your loan, adding security to your property purchase for the bank's safety. This scheme is not only open to singles and couples, but also to friends and siblings wanting to purchase a property together. There are also income cap requirements. As a single, you must be earning below $125,000 per year, and as a couple or a dual income application, you must be earning less than $200,000 per year. This income is noted as per your notice of assessment, so it is your strict taxable income that will make your eligibility. I'll leave links below to all of the government schemes and incentives that I talk about in this particular section so you can research them on an individual basis. The First Home Super Saver scheme, in my opinion, takes a little bit more forethought. It is underutilized, however, it is something that people need to really plan with. This is where you are making voluntary contributions to your superannuation because you can save at a lower tax rate of 15%. You can take up to $50,000 in voluntary contributions out of your superannuation fund to be able to use towards your home deposit. Again, I will leave a link to all the full eligibility and requirements for that scheme below. Now, it wouldn't be a first home buyer video in Australia without talking about stamp duty exemptions. In Victoria, you can get a stamp duty exemption up to $600,000 of a purchase price with a sliding scale discount up to $750. New South Wales exempt up to $800,000 with a sliding scale up to $1 million. Each of the states constantly change their stamp duty and concession policies, so research below if you are not part of the Victorian or New South Wales states. The last thing I'm going to talk about for government incentives is the First Homeowners Grant. This is only available for new builds. I cannot tell you how many times I get the question, am I going to get a $10,000 payment just for purchasing a house? The answer is no, that is long gone. This is only available for new builds. This is because the government is trying to incentivize people to build more dwellings because we simply do not have enough housing. If you combine all of the government incentives and grants together, there is tens of thousands of dollars worth of value up for grabs. It's important to understand what you are eligible for and how much value you can actually get out of it. Next, we want to talk about guarantor loans. This is very similar to the first home guarantee. If you're eligible for the first home guarantee, I would stick to that one. However, if you don't meet the income cap requirements or the property you want to purchase is above the property price cap in your state, you can use a parental guarantee. This is where your parent will act in the government's place, guaranteeing your home loan, essentially adding extra security to your transaction so the bank doesn't want to charge you lender's mortgage insurance. You'll also generally get a slightly better rate, but it will not increase your borrowing capacity overall. You will still need to lend all of the money associated with purchasing the property. For example, let's say you have a $1 million property you want to purchase and $100,000 as a deposit. This means you have $900,000 you need to borrow to be able to purchase the property. This is a 90% LVR and would incur lender's mortgage insurance. A parental guarantee will secure a further $100,000 against your parent's property. You will still need to lend that money, so the full $900,000, but the bank receives extra security, which means they won't be charging you lender's mortgage insurance for the purchase. This could save you tens of thousands of dollars depending on how much the premium was going to be. Now, on lender's mortgage insurance, sometimes that is just a cost of doing business. If you need to pay lender's mortgage insurance to get into the property market and you've exhausted all other avenues, it's not as bad as people think. Lender's mortgage insurance is not evil. It is something that it can be very useful for someone when everything else might not be available to them. Next, I want to touch on managing your emotion and also then managing the risk in purchasing a property. Purchasing a home can be a very emotional decision, and generally emotional decisions lead to bad decisions. Things such as overbidding, ignoring red flags on the building report, and even stretching your budget right to the end of your borrowing capacity when you really know you shouldn't. One thing I suggest that everybody does is set a maximum purchase price early on, and that way you can manage your budget. Buying a home is all about managing variables, and if you make the purchase price solid, this is something that can help you. So before you even go out to inspect a property, make sure you have a maximum budget set in mind. Two really big mistakes I see people make way too often is not getting your contract reviewed by a conveyancer and not having a building and pest inspection done. If you don't have these two things done, you can potentially step in an absolute minefield that can cost you thousands of dollars into the future. When we're looking to go make an offer on property, don't Don't just look at the price range that the agent has set. Go to realestate.com, go to sold listings, and put the same property features in that same suburb. That we can understand what things are actually selling for. A lot of them might even say contact agent. Don't be afraid to call and say, hey, what did this property sell for? You need to understand what the market is paying for properties that you want to purchase. Always negotiate the offer and get yourself the best deal possible. Stick within your budget and make sure you are not overstretching yourself and using all of your emergency funds up just to get something you really, really want because you've fallen in love with the property and you are making an emotional decision. Now with this, I want to touch very quickly on auctions. Do not go to an auction unless you are fully pre-approved. There are 3 different types of pre-approvals. Unless you have a fully assessed pre-approval, do not go to auction. Make sure your contracts are reviewed and you have done a building and pest inspection beforehand. When you purchase at auction, there are no conditions. There is no cooling off. You have bought that house. Set your maximum budget, bid with confidence until you hit your maximum purchase price, of course, and you stop bidding. Now let's fast forward to the settlement process. Your offer's been accepted and you've won the property. What do you do now? The settlement period generally is between 30 and 90 days, depending on what was agreed upon with you and the vendor. Once you have a fully signed contract, you send that across to your mortgage broker, who will then provide it to the bank. They'll then run through all of the final checks on your home loan applications to get what's called an unconditional or formal approval for your loan. From there, you're going to need to organize your building insurance because all banks will want to make sure you have building insurance before settling on the property. Make sure you have touch base with your conveyancer at least a few days before settlement to make sure you have the right amount of money inside your account, because chances are there's going to be some last minute rates and adjustments coming at settlement, so make sure you have a little bit extra budgeted inside that account. You don't want to be scrambling on the last day, transfer funds, and it takes 2 days to clear, and all of a sudden you miss settlement. Settlement is the last hurdle. You want to make it as fun as you possibly can, because guess what? It's so exciting when you purchase your first home. You just can't wait to get inside. If you need help purchasing your first home, book a one-on-one first home buyer session below and subscribe for more.